Hey everyone, welcome to another EasyEquities webinar. And it's so nice to see you all. I hope you guys had a good day. And let me get into it. So before EasyEquities, anyone who wanted to invest in shares would be charged high fees just to buy a stock, would face minimums, and will have crazy jargon thrown at them. So now with EasyEquities, all of that is gone. No minimums, no jargon, just simple investing. And we are here to discuss what exactly our investors are actually buying on EasyEquities. So my name is Lesedi Mfolo. I'm the brand manager at EasyEquities. And guess what? I'm not alone. I'm with the awesome Carly Barnes, the relationship manager at EasyEquities, as well as the big shots from Financial Mail, Rob and Giulietta. So to get the introductions out of the way and to make sure we get into the juicy part of this conversation, we are going to head over to Giulietta to give her elevator pitch exactly to tell us who she is. Giulietta?
Thanks, Lesedi. I'm the money editor at Financial Mail, so I handle the copy that comes in on companies and investments, stock markets, that sort of thing. But it's a small team, so we'll chip in, but that's really what I do.
Awesome. Love it. I'm glad you kept it under 30 seconds. Rob, I hope you can do better than that. You're up next.
Okay, I'm Rob Rose. I often speak in silly Australian accents, which I'm doing right now, but that's not me, so I won't do that again. So I edit Financial Mail, Investors Monthly. We put together this fantastic magazine once a week, and we're eager to reduce all the jargon and speak to you guys more about what's on your mind and what we should be investing in and why. And here to have fun tonight.
That was pretty good, Rob. Close second.
I get an intro, Lesedi?
Carly, I'm coming to you, my girl. You know I can't leave you like that.
Don't I even get like intro music, cheerleaders? What?
No, we actually gave you the best song coming up to this webinar. I'm sure you all heard it. So I don't know what you're going on about. But like I said, I'm not alone. I'm chilling with my girl, Carly Barnes, and she'll give us her elevator pitch because she is so keen to talk right now.
Elevator pitch. Yep. All I can say to you is, okay, well, everyone knows me. I'm Carly. I'm the relationship manager here at Easy. I just wanted to say that I could totally give Rob a run for his money on his Australian accent because I'm like a professional. I've watched enough MasterChef to basically have Australian citizenship right now, Rob. So we'll have to do an accent off at some point, I think. It's really cool to have you guys here, though. I mean, Financial Mail is such a renowned publication, and I think it's just amazing to be able to open this conversation up with our own community. You know, there's so many investors who I'm sure would love to just pick your brain or hear more on your thoughts on the top bought shares and ETFs on our platform. So thanks so much for joining us and hanging out with us. And let's chat. Les, I put out a tweet before this asking people what they thought the top bought shares and ETFs are. So we obviously know what they are, but before we get into it, was that a surprise for any of you guys? Did any of you guys look at the top 5 bought SA stocks and think, what is that? What is that doing there?
No, that seemed to be quite sort of natural. Like Sasol's had such an amazing recovery from last year. Yeah, and if you'd been brave enough to climb in, because I mean, Rob was brave enough to climb in, and then he got really cold feet, and he sold out at about 50 Rand, didn't you, Rob? And then you climbed back again.
No, the thing is, when Sasol hit 20 Rand, right? I mean, sorry, I think it was about 20, 30 Rand. I mean, that's super cheap. It's either going to go to zero from there or there's going to be a recovery. So I think that's, but you don't quite know at that stage where it's going to go. And we're in the middle of a pandemic. So, you know, I think there's some trepidation was justified at that time. But since then, you know, it's, 170% up in a year? I mean, it's spectacular. But that is partly, that's oil price as well as the fact that Sasol has unique factors about itself. It's in a recovery phase. And I think that there's two things combined to make it quite a good investment in the last year. Would you have known that, Giulietta, a year ago?
No, I mean, I err on the side of caution, as you know. So, look, I mean, the chances of a stock going to zero are very small unless it's a really badly managed company with lots and lots of debt and its
African banks, Steinhoff.
Well, yeah, okay. There are some big examples out there. but Sasol, I suppose, had enough of a business still to have value in it. So even though maybe its debt eclipsed its market cap, it wasn't going to be forever. But I do have to point out.
This is why we bring in the pros. Am I right, Lesedi? Like, this is why we bring in the pros. You guys know so much about this stuff. Les, do you hold Sasol? Obviously, that's one of our top 5 bought, but maybe give us the rest. Do you hold Sasol? What are your thoughts?
Yeah, let me jump in quickly there before Rob and Giulietta just go off and tell us what the top 5 is. Those are my secrets, guys. So investors, this is the top 5 most bought instruments on EasyEquities from the beginning of the year to date. So first of all, we got Sasol. Thanks for releasing the scoop on that one, Giulietta and Rob.
Thanks a lot, Giulietta. Again.
Number 2, we've got EC10. Okay, and then at number 3, we got Sibanye Stillwater. And then number 4, we got Purple Group. You know how we do. That's our holding company, home company. You know how it goes. And then last but not least, we've got Naspers. So let me go with Rob because he was eager, telling us exactly what's number 1. So Rob, does Sasol surprise you that it's in there?
No, I think Sasol doesn't surprise me. EC10 is interesting. I mean, that's number 2, right? That's a crypto bundle. And I think that's just a reflection of the fact that crypto's gone completely nuts over the past month, gone up crazily the last 3 months and then down precipitously in the last week. So I suppose it reflects the fact that like a lot of guys were scared of missing the crypto rise, you know. I mean, what are your sort of thoughts, Lesedi, on EC10 and the crypto? I mean, where it's going to go from here?
Well, I was skeptical about EC10 and crypto before, and until I saw that beautiful basket that holds the top 10 cryptocurrencies via market cap on EasyEquities, I was like, okay, cool. I love this. It's diversified. I know crypto's risky, but let me enter. And then I went in last year. I decided to buy EC10, and it just started going up and up and up and up. I'm like, I'm riding this wave. I'm rich. Who wants money? You know? And then April happened, and then May happened, and then Elon Musk started tweeting, and then he said Tesla is no more allowing Bitcoin to, it's not allowing the purchasing of Tesla vehicles with Bitcoin, and then the Chinese bank came out and said, "Yo, relax," and reminded traders that this digital coin cannot be used as a form of payment, and it just started going down. And then I got nervous, but I remembered why exactly I bought into this bundle. And it's because I want that exposure to crypto, and I'm not going to hold it for, call it a year or 2 years. I'm going to hold it for 5-10 years, you know? So I'm still holding it. I've still got my fingers crossed, but I'm still going down with some of the investors saying, damn, what's going on? But I hope it goes to its highs again. But looks like Bitcoin is recovering, Rob. I don't know if you've seen that yet.
Yeah, it's just, I mean, the thing is about crypto is that, you know, there's no underlying assets. It's not like Sasol where you say there's a plant here, there's this massive thing in Louisiana, and there's nothing behind it. You know, it could go to zero. Like, it's not like there's assets to sell. So it's just straight out speculation. But the fact is, when you're doing that, it is going up, right? I mean, and given that Bitcoin has a limited number of potential coins in issue, you know, it's probably a safe bet as long as you don't pile everything into Bitcoin. I think it's a fine thing to do. Carly, do you bet on Bitcoin, because it is like a lotto, right?
I'm still on the fence about crypto. I'm very crypto curious, let's say that. I have about 4% of my portfolio in the EC10. And that's just because you'd be crazy to ignore the growth potential of crypto. Yes, it is volatile, but if it's a small portion of your portfolio, when it's growing and it's doing amazing, it can really lift your portfolio nicely, even with such a small portion. And if it's volatile and if it's not behaving itself, well, it's only 4% of my portfolio, and I'm comfortable with taking that amount of risk. So I found my happy space. But I must be honest, I'm just a good old fundamentals gal. I just like companies that have really good value, like Naspers, one of our top 5. I mean, that's just a company that so many people in our community adore. And if you really believe in the vision of the company and the leadership, that's my style.
And Purple Group?
Lesedi, what about Purple Group? Come on.
No, Rob, that's why we got you in here. Tell us what you think about Purple Group. Obviously, I know that we had a good set of results, and you know the partnership with Capitec is booming there. So let's hear what the gurus have to say, the financial editors and journalists, and tell us what you think about Purple Group.
Well, if you wanted gurus, you shouldn't have asked us, mate. We can't do that. We're not the gurus.
Maybe they're the next webinar, okay? The next panelists.
But I think what is interesting about Purple Group being above Naspers, because Naspers is a massive company, market cap, it's huge. It's you would think, to some extent, you'd imagine that in many months Naspers would be number one, above Sasol even. So the fact that Purple Group is above it is I think a recognition of the fact that a lot of people are using the EasyEquities platform and they're seeing what the actual product does. And I think that's why it's an interesting thing. People like the platform, they like what's happening here, and I think that to some extent is a really positive sign for Purple. I think people see it's working. Jules, what do you think? You know more. Well, you're more of a guru.
Not really, but if I look at your share price performance of the last year, you're up fourfold, 32 cents. I think this time last year it's 136 cents or thereabouts. And that is a massive ringing endorsement from the people buying your shares that you're doing the right things. So, I don't want to, blow your skirts up, as it were. I can also do an Australian accent, by the way.
Australian accent on.
But I suppose there's always been question marks about can Purple sort of monetize, what it's got going through EasyEquities. But you've got some very strong backers, right? And some you've got partnerships with kind of the fastest growing bank out there. So I think that gives a lot of people a lot of comfort to actually use Easy besides its own merits. And to me, it's inevitable that the share price was going to rally. I guess the question for everyone is that going to come through in the numbers now in the next year or so, and to get the share price onto the next level?
A lot of companies that have a lot of users it doesn't, like you say, Jules, it doesn't necessarily translate into profit. But in this case, I think, was it Purple's half-year results where the profit went up massively to 8 million from far less than that. I think less than $1 million. So that's a sign that the monetization is there. And I think that's something you don't see in a lot of companies that focus on getting lots of users or focus on the users. So I think that's a positive sign that you know how to monetize stuff. I think that's part of it, is that's why the share price is partly up, 300% in 3 years or so.
That's beautiful stuff coming from Purple Group. But, we could go on with Purple Group and the rest of our stocks on the top 5. But for our investors, I'm going to let you know that all the local stocks are available on EasyEquities, just remember. So the number 1 stock is Sasol. Number 2 is the EC10. Number 3 is Sibanye Stillwater. Number 4, Purple Group. And number 5 is Naspers. So heading over to the US of A, Carly's favorite. Carly, tell us what is the top 5 that's
and I can also do an American accent, so I could do the whole segment like this, but I won't put you guys through that.
That's really good. Wow.
So, I'm going to let you guys know the top 5, a couple of clues. There's some tech companies in the mix there, actually quite a few. And then there's a little bit of an interesting infusion, a little spice infusion there as well, which I'll tell you all about as well. So here they are, top 5 most bought US stocks. I'll take it from number 5. Number 5 is Palantir Technologies. Number 4 is Apple. Number 3 is Tilray. Number 2 is NEO, and number 1 is Tesla, our own South African at the helm. So that is the top 5 US stocks. Now, I actually hold 2 of these in my US account. So I hold Apple and I hold Tesla, but I also hold a company called Canopy Growth, which is the spice I was talking about. I wanted to say herbal, but didn't know how to go there. And Tilray is also obviously another marijuana company stock. So I actually was on this whole journey trying to decide if I should get more Canopy Growth or if I should get more of Tilray. So I was researching this anyway. And then when I went to see it was on our top 5, that really piqued my interest. So I want to ask you guys, how many of you are invested in marijuana company or cannabis company stocks?
As opposed to just helping the guy out down the corner, right?
Obviously.
No, I think it's really interesting. I mean, locally, South Africans haven't really got onto that much. luckily we don't have many companies that do that. I think Labatt was trying to do it. So it's still something that's growing, but you see the growth in the US and you see the growth in Canada in those kind of companies. It's pretty spectacular. It's something that we haven't really got into our public consciousness because I don't know, perhaps we're a very prudish nation. We don't think that it can grow like that. But like you say, I mean, Kylie, what are those kind of prospects? What are those kind of ratios that those companies are trading on? Are they quite compelling still, the growth? So
it seems like in general, the industry has been on a bit of a plateau for the last while, but specifically Tilray, they've just done a merger with a Canadian company called Afria. And Afria has a lot of international distribution. It accounts for a lot of their revenue, actually. So I feel like that merger is a good move because it's going to give so much more access to Tilray, which is why I think there's an appeal for that particular share. If you look at the industry as a whole overseas, it's quite interesting to follow the movement. I think there's a lot more public interest in it. There's actually a movement to try and get it legalized at a federal level. So right now it's only certain countries, it's California or, it's certain regions, but there's quite a strong movement to get it legalized federally, which could be pretty huge. I know Mexico is also looking into doing it on a national level, legalizing it. And so if you just think about the future demand of that industry, and it's not just, the guy who wants to smoke a joint legally, it's cannabis has so many medicinal uses. There's so many uses for the production of marijuana. So that's why myself personally, I was quite interested in the industry. But looking specifically at Tilray, I think that there's some promising aspects about that company specifically because of their recent merger and because of the potential they have for international distribution. So yeah, that's my thoughts.
Is it not a bit like Tesla, where people get very caught up in the hype of kind of like the the next big thing, and Tesla's just its PE ratios and the very it's just totally disconnected from anything else, and the growth is still to come, and you almost get caught up in the hype, and to that extent, it almost becomes like a crypto asset. You invest because of the speculation rather than what you expect the profits to be at some stage.
Yeah, I mean, Tesla's another one where I hold it and it's done extremely well for me, but I can't quite decide how I feel about it. I mean, at the beginning of this year, it was at $900. It then dropped down to $550. And I think that could also be amongst many reasons why it's in our top board. I think people saw a really good opportunity to get in there at the lower $500, $550 rate or price. But there's so many different aspects to it. So there's Elon Musk's interest in crypto. And I think crypto is like such a hype thing right now. Thus, it generates interest for Tesla. So it's so multifaceted, but the electronic vehicle space, from my personal opinion, it's obviously a growing market and there's going to be a lot more competition in the future. So I'm interested to see what happens with Tesla going forward. Are there going to be competitors that kind of blow it out the water? Is it like the forerunner? So it's always going to be leading in that space? I'm not sure.
It's a big question, though. Can you trust CEOs who are born in Pretoria? I mean, I'm not entirely sure. It's a big. I mean, Marcus Jooste and Elon Musk. I'm not entirely sure that there's not a disconnect there. Do you think, Jules?
Don't upset the Muskers, man. They will take you down.
Yeah.
What were you going to say?
I was going to say I'm really sort of struck by the composition of the top 5 shares. It's I mean, the fact that you've got a couple of electric vehicle makers, NIO, I have to confess that I had to look it up. It's a Chinese electric vehicle maker. I mean, it says that the buyers of these shares through your platforms are either really savvy, they're kind of looking out for shares that aren't maybe household names. Palantir is also, it's a data mining company. But I think a couple of these shares also seem to be sort of the meme stocks, a la GameStop, that rose to prominence quite dramatically earlier this year, and GameStop then sort of fell in a heap. So I'm curious as to why people are buying into, say, a NIO. I understand the Tesla appeal, I understand Apple. NIO sort of interests me a bit. And I think it's quite interesting. I mean, I was looking at an article on Ford, which wants to have 40% of its vehicles, electric vehicles, by 2030. And now Ford has got loads and loads of money, whereas NEO doesn't. NEO has to do joint ventures. It's got a manufacturing company joint venture, and it doesn't actually have the deep pockets that the old guys do, the Fords and the BMWs and the Daimlers. And I sort of wonder if they aren't maybe the safer bets, the kind of the sleeper stocks in the electric vehicle market that people should look at, because they've got the cash flows, they've got kind of the history, and they've got the kind of the ballast, whereas the new guys don't. I was just quite struck by these outliers in the top 5.
Giulietta, I actually heard something, or I read somewhere that Apple is even looking into getting into the electronic vehicle space. I don't know what that means, but they're also entering that market. And to your point about NEO, I know they specialize in batteries specifically. I don't think that's all they do, but I think that's a strong focus of theirs. So I'm just wondering if maybe people are seeing almost, it's like the gold and the shovels, like rather go for the shovels. Like this is a part that's going to be high in demand at some point by multiple people. Maybe that's the thinking behind it. I'm not sure. I agree with you. I don't know too much. It's this new industry, so it's hard for any of us to really understand the true, the true value.
Well, I mean, if I can just throw one last point. I mean, as a couple of guests I speak to on my show, Wayne McCurry, who's been around for ages, says he thinks sort of the new super cycle, when we talk about super cycles and commodities, is actually in the whole kind of green revolution and all its ancillary components. So battery technology, hydrogen fuel cells, solar energy, whatever it is. But that's the next sort of maybe 20-year wave where investments are going to go.
And that's why you see a lot of companies, I think, that are old school, like focusing on coal, guys like Exxaro trading ridiculously cheaply. Whereas there's a premium attached to kind of new wave, new energy conscious companies, especially after the G7 ruling last week on coal companies and new energy. So I think that's the theme that's driving a lot of the investments.
Yeah. Wow. As you can see, investors, these people are super passionate about the US shares. So they've mentioned that social media speculation, meme stock rallies have fueled a lot of volatility in the US markets. But now, what happens if I don't really want to be part of that whole volatility and I'm scared of investing into one stock? Carly, I know you love these products and they're called ETFs. Can you give us the definition of an ETF, or do you know what it is, like in layman's terms, like super simple? What is an ETF to you?
I have fallen in love with ETFs slowly, but now I'm fully committed. We're engaged, we are getting married. I love ETFs. Simplistically, ETFs are essentially a collection of shares or companies that you can invest in with one transaction, and they follow a specific theme. So it could be an industry theme, like the financial markets, or it could be a top 40 theme, which would be the top 40 companies by market capitalization. Why I love them is that they just, give you immediate diversity. So you're immediately lowering your risk. They're really affordable. Instead of individually investing in 20, 30 different shares, I get to have one transaction with a cost attached to it. I think they actually expose you to different economies and companies that maybe as an investor you wouldn't have actually known about. I've recently been reading a lot about the emerging markets, Satrix emerging markets ETF, and it's just not something I ever considered for my own personal strategy in terms of investing in the underdog economies. I wouldn't have even gone there unless I had been looking into ETFs. So I'm a big fan of them, and our community is as well. I have the top 5 ETFs for us to talk about, but they're actually very similar in theme. So I think that would be interesting to unpack. The number 5 top bought ETF is the Ashburton Global 1200. The number 4 is the Nasdaq 100 feeder by Satrix. Number 3, the Satrix top 40. Number 2, the Satrix MSCI World. And number 1, the Sygnia Fourth Industrial Revolution. So for me, I can see 2 major themes coming out there. The one is technology. Okay, so the Sygnia Fourth Industrial Revolution, it's not technology in the way that we know it simplistically, like Facebook and Amazon. Those are all names we know. There's actually companies in there that are VR, that are electronic vehicle, that are drones. So it's quite diverse in its definition of technology, and then the Nasdaq 100 feeder as well. So there's a technology theme that's coming through quite strongly, and then also global exposure. So the MSCI World and the Ashburton Global 1200, those are ETFs that give you broad international exposure from lots of different countries and companies. And I think, that speaks to people looking to maybe take advantage of the currency risk mitigation, of the offshore exposure diversity in their portfolio. And the Satrix Top 40 is just a massive crowd favorite. I mean, it's won the People's Choice Award at Salter 4 years in a row. This is the ETF. When I speak to anyone about ETFs and I ask them which one do you own, most of the time it's the Satrix Top 40. It's just a firm favorite with our community, and I think all South Africans. So I don't know if you guys have any thoughts on those trends, sort of tech and global exposure.
I love the fourth industrial revolution one. I think it's fantastic. I mean, if you look at the themes of all the stuff we've discussed, I mean, I think that one hits a lot of the high notes, you know, and I think that's why it's. But I mean, it does also demonstrate the kind of pitfalls of investing, because it has gone up 47%, I think, in the last year, but in the last 3 months it's down like 10 or so. So I mean, this is what happens. You have shares that go up and down, so nothing's going to be assured or guaranteed. But I think that it's hitting the current themes of where we want to be in terms of economies, cleaning up, going green, being more creative. So I mean, that's the one I like the most.
Yeah,
I have invested my daughter's future fortunes in the Satrix fourth industrial ETF. So her future is in the hands of Chinese teenagers, gaming. So let's hope they do a lot of it. But I just have to have one, there's one issue that maybe I have with ETFs, and personally I'm a little less, I'm a bit risk averse. So I love the diversity.
Yet you invested your daughter's entire future in one ETF. Some risk aversion.
Well, not her entire future, okay, but the one thing that sort of foxes me a little bit is the Ashburton Global, and it's got nothing against Ashburton, but 1,200 stocks or a feeder fund. It means that you are so sort of split into tiny little components. It may be too much diversification, and I wonder if anyone has any other thoughts on that. Where if you were putting together your own portfolio, there's no ways that you would buy 1,200 shares. Say, you might sort of, a sensible portfolio is generally 20 to 30 shares. So Satrix 40 is great. I suppose S&P 500 is maybe a bit of a stretch, but when you have that many stocks in it, I wonder if you don't become overly diluted. That's maybe a black mark, not a black mark, but something that I worry about a little with regards to these kind of massively diversified ETFs.
Yeah, and I had the same thought, especially when you're now combining a lot of different ETFs. So I have the MSCI World, I also have the Sygnia Fourth Industrial Revolution, I also have the S&P 500. That's a lot of the same kind of theme, at least. And are you kind of diluting your portfolio by doing that? So for me, in my own personal strategy, I actually like to mix it up. I like to use individual shares as a way to maybe have higher risk, more sort of concentrated portfolio. And then I have ETFs, which take up a more passive, I'm not even going to think about it, I'm just putting a little bit in there every month. And so for me, the balance of the two satisfies that I can concentrate certain industries or certain companies if I want to as equities in my portfolio. That's kind of how I see it. But I see your concern, and I think, yeah, it's kind of, you have to decide on your own strategy and kind of marry it to what you put in your portfolio.
Can I respond, Jules, on that? I mean, my thought is that if you do that, you are taking a very risk-averse approach. You're basically putting your money in sort of you're putting your money in global stock markets, right? So you basically, the only reason you do that is if you bet that the stock market's going to recover from and do better than, say, keeping your money in cash or something else. You're not looking for any upside. It's just the most risk-averse kind of place you can put stuff. So you're not looking to outperform anyone. You're just basically taking the most risk-averse thing. And I suppose if you're going to do that, then you're not really going to lose out terribly. I mean, if you put your money, say, in the Satrix China ETF, you're taking a more specific risk on a specific country recovering. But this one, the other one, it's basically, stock markets. If you believe stock markets have been beaten down, and I think you shouldn't believe that at the moment, then it's the thing to do.
Guys, we've got one or two questions that I want to get to because we're going to wrap up soon, and we actually had a ton of questions from you guys. Thank you so much for your engagement. I know a lot have already been answered on this chat. Some of you have asked about if we're going to be sharing this or we're talking too quickly, you can't write everything down. Love that you think everything we're saying is very important. It is good. But also, we will definitely have this recording. We will share that with you as soon as we have it. It will be up. And just two questions that I thought were good to raise sort of publicly so we can make sure that they get answered. The first one was and is the most common question we get on EasyEquities across the board. And I think Giulietta and Rob, your input here would be great. How do I know what shares to invest in? And I will give you my short and sweet answer. There's no crystal ball that's going to tell you, you've got to invest in this. It's going to be an overnight success. There just isn't. But there are a couple of really good basic principles that you can follow that will really help guide that decision. One, follow amazing, reputable publications like Financial Mail, who write about this stuff, who have experts weighing in, who do awesome stock analysis and share a lot of insights about this world. So pick up the latest copy and start reading it on the regular because you get smarts like this all the time. And do your research. Do your research. We are sitting here having this discussion about different stocks. Go and have that discussion with other people. Go and follow reputable journalists on Twitter. Go and do the research. Go and look at the company financials. Yes, sometimes it's a bit intimidating. I'll admit it. I don't get all the graphs. But I do get a gist of the leadership. I do get a gist of what that company does, what the future of that industry might look like. And that's a really good place to start. And if you can get all that information together, you need to trust yourself and believe that you've got the full potential to create a portfolio of shares and ETFs that can outperform top asset managers if you want to. In fact, we see that every day, so we know it's true. So that would be some of my tips, but I don't know about you guys, if you have anything to add to that.
I suggest that you that you look at companies that you use. So, if you bank with Capitec or FNB, if you shop at ShopRite, or if you think Truworths fashion is really good this year, or if you think, oh my God, they started their winter sales really early, I don't see anyone in the shops. There is so much stock that just doesn't appeal to me. Like, it can give you a feel for a company, and then maybe from that point, if you think, wow, this business is doing amazing, like it's so busy, it's I can never get in, or whatever it is, like this business is great, I really like it, there's a lot of people talking about it, or I know that shop there, then maybe that should pique your interest, and then do your research, find out more about the company. So attend ShopRite's results presentations, go on to Sense, because that is available to you. You're using the internet to do your share purchases, and and find out more about a company that way. But don't be scared to go with what you know and use as a consumer. I would say.
Okay. Can I? I mean, from my experience, I think that it's good to understand the company's story and understand stuff. I mean, Jules talked about companies. I think that the disasters you see, the companies that collapse and people get caught in that, it's because they didn't really understand what was going on. They just bought into the hype. Steinhoff was doing well, like it's bought all this stuff in Europe, so let's just get into that thing. Understand it and start small, because then you can understand it. And then after a while, nobody understands price to book ratios from the start. You start off by investing a little bit here, an ETF here, and then you start to think what's happening, and you become more immersed in what this means and why it's important. And I think if you start small and understand everything you do and keep a sense of skepticism, I think that'll serve you pretty well in the long run.
Yeah, when you can start investing for what you would pay for your parking tickets, you can start. It's the beginning of a journey. Okay, last question, guys, and then we're going to wrap things up. The question is, how do I invest in US shares? So you can 100% invest in US shares on the EasyEquities platform. All you need to do is fund your EasyEquities ZAR account, transfer your money into dollars using EasyFX, and then boom, you got dollars to invest with. You can invest in Amazon, Facebook, or anything you like with however much you like. It works in the same way with all EasyEquities. You invest with what you got. And that's it. That's our questions, guys.
Awesome. I think it's time to wrap it up and say thank you to our financial mail big shots, and as well to our investors for taking the time out to chill with us this evening and check out the top 5. Guys, don't worry that this recording will be on our YouTube page. We'll make sure of it. And I know that Financial Mail and Business Live have an offer for the EasyEquities investors. So if you're looking to do your research, head over to the social media. They've got an offer there for you. Check it out and make sure you do your research. Like they said, start small, do your research, and just start, guys. Just start. So from EasyEquities, from Financial Mail, thank you everyone for joining us. Rob, Giulietta, you guys were awesome. And obviously, Carly, you're awesome as well. Thanks a lot, guys.
Thank you, guys. It's been great.
Guys, it was fantastic. Let's do it again.
Definitely.
So easy.